Hey guys, back with another video. Today we're talking about the Federal Reserve and the US government bailing out depositors of Silicon Valley Bank as well as Signature Bank, and what it might mean for crypto as well as the economy and the stock market. So let's get into it. So really the theme of this video is the old adage, don't fight the Fed, because this could easily be seen as a Federal Reserve pivot where, a lot of people were saying they're going to keep raising interest rates and keep them high until something breaks in the economy. Well, here we have the 16th largest bank in America breaking fully, completely going out of business, completely insolvent. And it's a result of the Federal Reserve raising interest rates, because a lot of the assets held on their balance sheet were long-term bonds, which, of course, if you don't know already, when interest rates rise, the value of bonds fall, because now you have much better options on the market. So back when interest rates were, nearly zero, buying a bond that yields nearly 0% is much worse than buying a bond that is yielding 3-4%. So of course the value of that bond is going to fall. And this is what happened to Silicon Valley Bank, to the point where people started noticing that their balance sheet was in trouble, and it started a bank run where their customers, were trying to withdraw their money at once. And because their balance sheet had fallen in value, now they didn't have enough money to fulfill their customers' withdrawals. And so, as we can see from this situation, this is likely a situation that's going on other banks, maybe not to this extent, but to a similar extent. And, this is going to put extreme pressure on the Federal Reserve to, at the very least, halt their interest rate hikes. And in the short to medium term, I think it's really going to put pressure on them to lower interest rates, because, as we've seen, the 16th largest bank in the US has broken, and it forced them to step in and save the depositors. So this could easily be seen as a pivot by the Federal Reserve, which, again, don't fight the Fed. When the COVID crash happened and the Federal Reserve came in, stimulating the economy, the stock market ripped to the upside. So this could be seen as a similar scenario, where the Federal Reserve came in and is stimulating the economy, and it could be the beginning of a huge bull run. And I'm not saying it definitely is, but that's kind of my thoughts right now. And especially for crypto, where, Bitcoin was invented, as a result of the 2008 crisis. And over the weekend, I was buying crypto as much as I could. I wasn't as liquid as I would have liked to be. If it was the week, it would have been better for me. But yeah. So yeah, I've been loading up mostly on crypto, Bitcoin, Coinbase, a little bit of Ethereum and Solana. So those are my thoughts on the events that we've seen over the past week. If you liked the video, leave a like, subscribe. See you next video.